talk about it therefore. Now, for the ninth time, the Central Bank of Kenya's Monetary Policy Committee, MPC, has opted to leave the CBK's signaling lending rate unchanged at 7%. In a statement, CBK Governor Dr. Patrick Njoroge has said that the decision was reached after observing that inflation expectations remained well anchored within the target range and that the economy continued to operate below its potential level. Now, the rate-setting committee further observed that the leading indicators for the Kenyan economy point to a relatively strong recovery in the first quarter of 2021, supported by strong performance of agriculture, construction, information and communication, real estate, and finance and insurance sectors. According to the MPC, the banking sector remains stable and resilient with a strong liquidity and capital adequacy ratios. Now, the ratio of gross non-performing loans (NPLs) to gross loans stood at 14.2% in April compared to 14.5% in February. Abraham, the same thing. Just before we went on break, I asked you what it makes you feel. You said, we've gotten to a place where we're now impotent.
Yes. I say that because, you know, any fiscal or monetary intervention tool
yes.
must be able to invoke certain actions.
Yes.
Now, this is you've done a number for 9 consecutive times. Those are 9 quarters. Mm-hmm. So that means that's 2 years, 2 years and a month. Now, it can't be that everything has remained the same. And secondly, when you look at one of the things he said, is that we're still performing below. So if you're performing below, then why are you using the same medicine you used the last quarter and the quarter before that? Because if I went to the doctor and he gave me a medicine and I still have pain, he'll have to increase my medicine.
Yes.
So I don't know what is informing us staying at 7, because honestly, I think if there's a strong comeback in those sectors that have been mentioned here, then we need to start pushing the rate downwards.
Yes.
Because that's the best indicator that we want to push to at least make the cost of money available to the people. So I think that rate needs to move.
Yes.
If for nothing else, for the sake that 7 did not work, another number needs to work.
Yes.
But the way we are constantly, in fact, the market, people don't even wait for MPC anymore. And that's very dangerous, because that number is supposed to actually call the tune of how the economy resonates.
Yes.
But now, if it has become predictive, then it loses its potency in terms of what it's supposed to interpret.
Yes. Abraham, I'm going to come back to you because he's mentioning some key points there. He's talking about the operation of agriculture,
yes,
the telecommunications sector, the insurance sector. But we do know things are not okay in the insurance industry as we know of it now, with the big boys that are really complaining.
Yeah.
Gabriel, same question. Is it tied? And how much do you associate this with the physical discipline or indiscipline that Kenya is going through right now?
I think just to echo what Abraham is saying is that they've really made it, the rate has now become not important.
Yes.
Because there's no way Kenya has gone through the dip that we underwent and now, trying to see things come back. And then you're saying it's all the same.
Yes.
Then it means it has no impact on anything. And that's not the case. It's a very important rate, but they're making it look like something that has no impact on it. Now, what risks do they face with this? Because one, they're really controlled by the government borrowing. The government has to continue borrow.
Yes.
And that, on the other side, the banks have really put in a lot of money on this. So they're balancing between profitability of some of these institutions, both pension funds, banks, etc., and the financing cost of the government. So in playing that balance, the easiest decision to make is to do nothing, and that is what they're doing. And it's really a danger. It's really dangerous to a country that is going through various cycles, because then there's no expectation,
yes,
and there's no reaction to be expected by players in the economy based on that rate. So people now, we as analysts and everyone is looking for something else to track to determine the government borrowing, government spending, because see, if you increase their borrowing rate, then you expect them to sort of reduce the borrowing, but they have zero impact on the budget. All these things they're saying, they've analyzed strong performance in the agricultural sector. That was not the same case in March last year or
Yes.
in Q2 last year.
Yes.
So what narrative did they give us at that point in time? They're just changing the narrative to suit that. And I think I'll even end my comments there because we're giving it too much importance and it has not shown its importance in the last 2 years as has been put so.
I don't know whether we should end the show then. Let me bring in Rufus. Rufus, wow, you made some controversial statement. You said, let's have the recap back. That I'll be interested to listen to Rufus this morning.
Yes, so based on the data, the facts don't lie. The numbers that you've seen in the banks,
Yes.
they're making a killing out of this. Remember, we are still in the pandemic. If these guys are making billions of money, and the economy is still weak, it doesn't really make a lot of sense. You see, the original plan was to lower interest rates to 7%, so that these banks can push money to the people. And this is what is happening with other economies. So when money becomes cheap, people get funds, they invest in various sectors, and then the booming is what is supposed to be causing the inflation. But guess what? The inflation is still within target, meaning that we have not surpassed the target, meaning that this money is not going to the people, it's actually going to the banks. Because when the banks get the money, they invest right back into the government, and it's actually weakening the economy further. We're not seeing any progress in this.
Yes.
So yes, the 7% is good, but they need to make sure that the banks actually give this money to the economy. And the way to do this is basically by applying the cap back. So if the cap is not there, then the banks are the ones benefiting from
Yes.
the low interest rate.
Yes.
Yes.
Pretty much. Now, Abraham, well, let's therefore divert away from MPC because Gabriel is saying, well, you're giving quite a useless tool so much time. All right. Someone's going to ask you, Abraham, therefore, what is therefore the best way for the CBK, which is preaching the story for we need to increase lending to the MSME sector in the economy, which occupies 80% of the employment within the economy. What is the magic bullet? Have they failed to do that then?
You see, the fact that they are not utilizing the tool properly
Yes.
does not invalidate the tool.
Yes.
That number is critical. It's only that we've actually made it very less important. The only, as my two brothers have said, the only way is down. Push that thing down.
Yes.
Remember, during the Kibaki regime, it went to sub 1 at some point, and it worked magic. That's when you saw banks putting up tents and begging you and calling you that you've qualified for loans you've not applied for.
Yes.
And that's where we need to go because money needs to move from banks back into businesses.
Yes.
But right now what is happening is, the other tool they need to work with is the minimum reserves ratio.
Yes.
Because the less CBK holds, the more banks will have, and vice versa. So they can still lower that even by a percentage point.
Yes.
But don't release that money only for banks to invest in bank and government paper. Because what you're doing now is basically, you're defeating the whole purpose. Whereby banks are making profits. Because today, if you were to do an analysis of, let's say, the profitability of banks, which assets are they putting their money in? Most of them, their growth area is government paper.
Yes.
So if government paper is where they're making their money from, that means they're making money from all of us because the government is us.
Yes.
So the money needs to be in businesses. And the only way, banks are here to make money in whichever way. Even if they take their entire deposit book and lend it to one person, then they are good. So as long as their shareholders are happy.
Yes.
That at the end of the day, they're private entities and they have no obligation to fulfill any of our social agenda. That is not part of their job. And we should not expect that. So that's why there are tools that are supposed to drive you, either incentivize you or punish you towards a certain area.
Yes.
Now that's what that rate does. If you push it down to about 2, 3, then it's not profitable anymore for them to come bring money to the government. Then they have to lend it out because the lending rates are liberalized.
Yes.
So you're able to push them in a certain direction. But when the rate remains at 7, they are good.
Yes.
They just take money and give it back to you.
Yes.
So as my two brothers have said, I think it's time we became bold and accepted, number one, that things are not okay. Let's just accept it. That
Yes.
things are not good.
Yes.
We might want to say we are improving. Yes, but the pandemic is not over and the effects of it are not over. So let's be bold and be very, very purposeful that we're pushing this rate down. We are going to forgo profitability for a while and put liquid in businesses.
Yes.
But banks will only do it if they must. But they will not do it if they may.
Interesting, Gabriel. Same question. All right, let's therefore talk about what he's saying. And we're moving away from MPC. I promise you, Gabriel, because you want to talk about it. It's fine. We're moving away from it. So there's a question. I just want you to respond to the same way that Abraham is sort of talking about it. Well, look, is actually saying that the only reason as why he's saying the banks are resilient is because the default rates in the industry have gone down. And he's also telling you that the reason why they have gone down is banks now are going after recovery of assets. The headlines I'm waking up to this morning is that people are losing their homes because banks are going for those houses now, the mortgages. And one of the leading sectors that they're going for is transport. There's tourism and hospitality. There is also the one that is talking about agriculture, which is saying is the one that has improved the most. Question is going to be, Gabriel, so how do we get money into these specific sectors that we don't talk about MPC again then?
Let me tell you, Siba, if you're taking assets in tourism, who are you going to sell it if not someone else in the same tourism space? If you're taking assets in transport, what am I going to use a trailer or a transit for? I'd have to be in the same sector.
Yes.
So if those sectors are suffering, it means no one has the capacity to expand.
Yes.
So they're still within the same, they're just playing magic with that. Now, recovery, if people cannot access loans, how are they going to acquire these assets that you're putting up for sale in auctions, etc.? Because people get financing to buy those assets that are put up on auction. And then again, just backing on what Abraham has said, for example, Equity Bank. From last year March to this year March, they invested, they increased their loan book by about 110 billion shillings. They increased their lending to government by 70 billion shillings.
Yes.
Now, the government is competing out everyone else. And as a bank, I'm seeing here is cheap money, I'm going to do it.
Yes.
So as Equity Bank, if I'm selling, let's say a transport service business that has gone under, I'm selling the assets, someone else in the same sector comes to me and says, give me a loan to buy these assets. I'm not going to give them because they're in the same sector that I just closed down someone in. You know, what business are they taking up? If this person could not run it, how are you running it?
Yes.
So I don't get it when they say, when they're talking about this rate of, there's been improvement, a reduction. It's really not, we're not yet there for them to say that. And worse off to even highlight those two sectors whereby they're calling auctioning of assets as recovery and significant, because who are you going to sell these assets to?
Yes.
Banks are not in the business of running business. So unless they see capability of and the growth in borrowers so that we outpace the government in borrowing,
yes,
that's when we can talk about it. Before we beat the government and we reduce how much we're giving the government, there's no recovery yet.
Pretty much. All right, Rufus, 1 minute exactly. If you may, same question then. How do we get money into these businesses if indeed we are talking about the, I would say, the importance of this tool, the MPC?
I think the government should now try and reduce on local borrowing.
Yes.
Because the situation has become so dire. Even the SMEs are not actually investing in actual businesses. They are putting money in the government because the return is very high.
Yeah.
The return is 12.75%. This is very high. So considering the other businesses that are failing, they have high risk, the SMEs are actually competing with banks to invest in the government. So the best solution, I would say, is for the government to borrow externally. Because when the government borrows externally, then the interest rates are much lower. If you consider things such as the Eurobond, the cost is much cheaper. It's actually 2%. But when you compare these with local borrowing, it's very expensive, which is basically strangling the economy. So what the government is actually doing, it's like borrowing money from your own children, which is basically removing liquidity from your own family. So we should actually get money out there and then bring it into the economy so that we can stimulate higher production.
Pretty much. Gentlemen, I can't be more thankful for you guys joining us this morning for this edition of your economic review My name is Simba Elijah Charles Kiagi. Gabriel, we are done. Not talking about MPC anymore. Good morning.